The last week has seen a superb rally in the equity markets. We had the Nifty 50 touching the 10,000 mark as well, which it did so after 3 months. The last time we saw the Nifty touching 10,000 or being at that 10,000 level rather was even before the Prime Minister imposed the lockdown. So this rally is something that's got a lot of investors who've so far been on the sideline looking at the markets lustily. They are getting that familiar FOMO feeling creeping up on them as well. But before you pick up your phones, WhatsApp your brokers or log into your various broking apps, there are certain things that you need to take off from an overall personal finance perspective. The reason being, we are entering uncertain times. The world that lies ahead of us is going to be marred with a lot of uncertainties because COVID-19 has brought about a lot of economic problems, which in turn is due to the lockdown. So take out a pen and paper. These are the things that you need to take note of before you start investing once again in the equity markets. First up, look at the status of your job or income flow. Are you certain that your job position in your company is secure or that your business is doing okay? Income will continue to flow into the household. If you believe that your job or your business could be disrupted either due to the economic slowdown or perhaps even due to some technological change that could make your job position or your business redundant or irrelevant, then you should pause and think before you start investing in equities, because at the end of the day, this regular flow of salary or income is something that's sustaining your household, and you cannot have it being invested in a volatile equity market. Secondly, insurance. Since the coronavirus crisis is something that has caused a lot of us being careful about our health, I think health insurance automatically assumes a significant amount of importance. Penetration in India is still pretty low. However, the last couple of days have seen a lot of people buy insurance. If you have a family comprising a spouse and children, a family floater could serve the purpose. But health insurance is not enough. You also need to buy yourself life insurance. A plain vanilla term insurance will as well do the trick. Thirdly, this is very important. When you are able to invest in equities, do not take a loan and do so. Leveraging your equity positions could be quite detrimental, especially if you are a novice investor. You've got another side job going on. You may be a professor or a doctor, and you're not full-time into investing in equity markets. Taking leveraged positions, that's taking a loan and then investing in equity markets, can be very risky, so do not do that. Fourthly, invest only that amount of money which you're okay losing. That's the sort of mentality you need to have when you invest in equity markets. It does not necessarily, of course, have to be the case, but when you do keep that mentality, the anxiety that one often suffers from because of the market moves does tend to reduce. So what I'm trying to say is, take only the quantum of money that you're okay losing or that will not affect your day-to-day lifestyle, and put only that much in the equity markets. And also, of course, invest only with the mindset that you're not going to get access to this money for 7 to 8 years. Mr. Madhu Kela often says that the secret sauce to success is finding a good company and investing in it for the long term. So when you're investing in equities, keep a long-term time horizon in perspective. Now the eternal question, is now the right time to invest? What does the market look like in the future, and where to invest? Well, at ET Now, we've spoken to a whole host of experts. Most of them believe that this rally is quite strong. Of course, there still may be a couple of dips, but again, if you're investing in the long term, maybe you will be able to get over these hiccups. Also, we're going to get you some sectoral expectations and sectoral tips as well from some of our experts. For example, we had, of course, let me start off with market veteran Mr. Madhu Kela, who believes that telecom and pharma could see a lot of potential. Kunj Bansal and Kenneth Andrade both believe that agri-related themes could see a good amount of interest going forward. And then Vikas Kimani believes that consumer discretionary, especially those stocks that have been beaten down very badly recently, could see a whole amount of interest.